Hello everyone, so today we're back to talking about gold prices, but how can we not, because it just hit a 6-year high. We'll have a look at the daily as well as some short-term price charts in just a moment. But the key factors here being rising geopolitical tensions. So we've had President Trump place new sanctions on Iran, and in response to that, we've heard today that Iran now consider diplomatic relations unsolvable between the US and Iran forever. So no chance of renegotiating the Iran nuclear deal. At least it seems that way in the short term. And so that's something that can underpin gold prices. More importantly, though, is monetary policy, specifically US monetary policy. And so later today, we are going to have a speech from Jay Powell, the chair of the Federal Reserve. He's going to be talking to the Council on Foreign Relations. And I think at this point in time, and by the way, his topic is going to be the economic outlook and monetary policy. So this is not one of these flaky discussions. This is directly what impacts markets. At the moment, the markets are 100% pricing in a rate cut at the July meeting. So it's going to be pretty hard for Powell to row that back. It's pretty much off the back of his recent commentary that the Fed will do what it takes to sustain the recovery. So it looks like 25 basis points, one normal size cut in interest rates is going to happen in July. So now this meeting becomes, and subsequent comments, becomes a bit more about, will it be 50 basis points? Now that's something that Neil Kashkari, a non-voting member of the Fed, the Minneapolis Fed governor, has already pushed for. And so actually there's a decent amount of market expectations for a 50 basis point cut. I think Powell wants to keep that in his pocket for after the G20 meeting this week in case things fall apart. But he doesn't want 50 basis points to be the default expectation. That being the case, if he does push back against the 50 basis points, then I think that's when we see the dollar gain a little bit of traction and gold pull back a little bit from its recent breakout. Let's switch gears to the price chart, and you can see this is the daily price chart. So this is over the medium term what we're looking at. This was the consolidation phase. This was the high consolidation. We've broken out above there. So if we project this above, we end up at around 1680, so maybe 1700 at a push, as a medium-term objective here from this price pattern. But if you look in the short term, what we have to come up against is this level here, the 1435 approximately. If we change the level there, we get a round number. And you can see we've already started to ease off a little bit in the short term away from that level. Quite a little hefty little sell-off, bounce back with the bullish trend, but you can see maybe we peaked up above it, dropped down, bounced back, failing so far to get back above it. As I said, if Powell comes in a little bit of a hawkish surprise, trying to rule out a 50 basis points cut by perhaps talking a bit more positively about the US economy and inflation expectations, then we could see gold pull back a little bit here, and in the short term you'd probably be looking at this little triangle breakout area through here as a potential area of former resistance turned into potential support, and that comes in around 1410 to 1411. So let's see what we can see what we can make from this potential situation. But as I said, medium term gold looking pretty tasty here. All right, thank you everyone. Jasper signing out.